Good morning, everybody. We're here with Bluestone Resources. I'd like to introduce Darren Klink, President and Director of Bluestone Resources. He'll be talking today about our high-grade Cerro Blanco gold project. Before we get started, I'd just like to remind everybody to ask questions. You can do that through the panel on the right-hand side of your screen. There's a tab there that has Q&A. Please type your question in there, and we'll do our best to answer it. With that, Darren, I will hand it over to you. A little bit about Darren. He was previously with Oceana Gold, part of the executive management team there that grew that company from a single asset producer to a multi-asset, multi-billion-dollar company. He joined Bluestone in 2017 when the company came together and has been part of the management team that's been advancing the Cerro Blanco gold project to today. So with that, Darren, I'll turn it over to you. Thank you very much.
Very good. Thanks, Stephen, and welcome everyone. Good morning, good afternoon, good evening, wherever you are. It's great to have you on board here, and we'll spend the next 25 to 30 minutes going through the presentation, giving you an update on Bluestone and this what is really one of the highest grade undeveloped gold projects out there today, and we're just kind of moving this forward and into a construction phase here over the next few months. First slide you see there, that's the obligatory cautionary note, which does say that I will be making forward-looking statements over the course of the presentation. Bluestone, a real compelling opportunity. This is quite a unique situation. The company itself has really been in its current form for only 3 years. We were fortunate to be in the right place at the right time, where we acquired a high-grade undeveloped gold project in Guatemala that combined had more than $200 million invested in it over the previous 10 to 12 years. And we acquired it from a company, Goldcorp. Many of you might have heard of it. It was one of the largest gold producers at the time, has subsequently been taken over by Newmont. And really it was a strategy change for Goldcorp. They had decided that their operating mine in the country, which had operated for 12 years, producing 250,000 ounces of gold per annum, first quartile cost, was moving into a closure phase. New management came in, looked at the entire asset portfolio throughout the Americas, and made a decision that the Cerro Blanco project, despite the fact that it had such a significant amount of infrastructure and investment in it, was not large enough for them to focus on with only one asset, ultimately going to be in the country. So they looked to run a process to divest it, and Bluestone was fortunate to be at the right place at the right time, which at the time was a difficult time to raise money in the space. But as you'll see as we move forward here, the quality of the project, the quality of the management team, the backers that we have allowed us to do that. As I said, this is one of the highest grade undeveloped gold projects out there today, 1.4 million ounces in the measured and indicated category at 10 grams per ton. And we're continuing to add more ounces to that, and we'll talk a little bit about the exploration initiative and really the potential of this deposit. But I think what really sets us apart is you can see that regardless of what the gold price is, not something that keeps us up at night, because you can see that this falls within the first quartile of all-in sustaining costs globally. The feasibility study last year demonstrated that we would produce gold for less than $600 an ounce. At a time when we were using $1,250 an ounce gold, a barn burner of a project, and you can see as you move the gold price up today, we're just under $2,000, but at $1,600 an ounce, this project pays itself back in just over a year with an internal rate of return of 55%. Moving on to the next slide. Looking at the capital structure, 140 million shares out. So for an advanced stage project, that's actually quite low. And really it has everything to do with the fact that we've got a 12 or 13 year head start. Typically today out there, I mean, from discovery through to construction operations is 15 to 20 years quite easily, when you take into account the time to drill out deposits, do studies, get permits in place, raise finance. And we've effectively put the fast forward button on the CD player, and 13 or 14 years has been kind of our starting point. well financed. We did a financing that closed in May at $1.75 Canadian. The stock today is at $2.20, so it has moved up a little bit. But as you can see here, the backing that we have in terms of our shareholder base, I think, is arguably as strong as one could get for a company at this stage. The Lundin family trust holds 26% of the company. The Lundin family, some of you might be aware, have been very successful and active in the resources space, both oil and gas and metals and mining, for almost 40 years now. The Lundin family was our largest contributor on the initial financing we did to acquire this asset 3 years ago, and has subsequently continued to support. Jack Lundin joined us in January of this year to come in as CEO and work alongside myself and Stephen and the rest of the team to really move this now into a construction operations phase. CD Capital out of London, a resource-based fund, again, very supportive. And Newmont's stake there, you can see, is a residual stake that they acquired when they acquired Goldcorp. Goldcorp retained some equity when we acquired the asset. And then a broad range of both institutional and retail investors throughout Canada, the United States, and Europe predominantly. Very good research coverage for a company our size. You can see that there's 6 different brokers that cover us with an average target price that's north of $4 a share. And so from today's price, you can see, approaching a 12-month target that would be, close to 100% upside from currently where we're at. And we've got a couple of slides that I want to talk about as well that, talk about really the value creation opportunity that exists as companies move between that explorer developer into the construction, but ultimately into operations. And this is really where there's a huge significant opportunity. So when we look at here establishing a track record of results, this really just kind of looks at the overall sort of timing of what's happened over the last 3 years. As Stephen mentioned, I mean, we were able to put this together and acquire it in the middle part of 2017, immediately then focused on really the geology and the technical aspects, getting a strong sense of the geologic model. We got the drills out, and that really then set us up for an updated resource and ultimately putting that feasibility study out about 19 months ago, which demonstrated, as I said, a project that would produce between 100 and 150,000 ounces of gold at an all-in sustaining cost of less than $600 an ounce. One of the key things that came out of that feasibility study was that not unusual for a low sulfidation epithermal system such as this, they do require a lot of drilling. And we identified there was a fair bit of resource that was actually still in the inferred category, which ultimately then doesn't make its way into the feasibility study because it's only those measured and indicated category ounces in the resource category that can move into proven and probable and then drive the economics of the project. So we saw that as a huge opportunity. And so last year we initiated a follow-on drilling program that resulted in November of last year of adding another more than 200,000 ounces into that measured and indicated category. By our estimates, for every dollar we're putting into drilling, we're probably adding about $20 to the NPV of the project. And so, a big reason behind that is the fact that, these ounces are on veins that in many cases are already in the mine plan, but we need to tighten up the drilling. And so that was an important initiative last year, and we've continued on with that this year, where again we're not only tightening up the drilling and moving inferred ounces into measured and indicated, but we're doing step outs on veins that are in the mine plan, and we're intersecting good grades and widths. Some of the more recent ones here about 10 weeks ago, which we'll talk about. But ultimately these are things that are going to fall into the mine plan as we update it next year. Mentioned Jack joining us. Project financing, a key part really of any sort of project. You can have a great project, but if you can't finance it, it doesn't get into production. And we're in the late stages right now of really what's been a 12-month exercise for us with a group of international commercial banks to put the project finance in place. And so that's another very key catalyst here over the next couple of months for us. So let's talk a little bit about the project. So on this slide here, you can see we're down in the southeastern part of Guatemala. It's 2.5–3 hours down the Pan American Highway on good infrastructure. In fact, the Pan American Highway, the road that we take from Guatemala down to a little town called Ascension Mita, hardtop all the way. It resembles much of the hardtop not too far from where I live in Vancouver, Canada. So we're very fortunate from that perspective. Infrastructure is good. So often today, mineral projects are on the top of mountains in the middle of jungles, and you've got to put a fair bit of infrastructure to get to them, or even to bring things like water to them. Not the case here.
So, as Darren mentioned, southeastern part of Guatemala, we've got paved road access to site. The project sits outside of Ascension Mita, which is the nearest town. You can see in the background there, the project is largely agricultural. All the land around us is titled and fenced, and we own currently all the land that's required for the development of the project. A little bit about the feasibility study economics. In 2019, we put out a feasibility study. That feasibility study was done at $1,250 an ounce. It demonstrated an 8-year mine life with an initial capex of $196 million, all-in sustaining cash cost of $579 an ounce, which would put it in one of the lowest or first quartile all-in sustaining cash costs in the industry once in production. And you can see there in the bottom right-hand side of the slide, as we move up in gold price there, the economics, the IRR, and the after-tax payback significantly improve at a higher gold price. And and that's really what this business and the project's all about, is with these margins and these economics, the amount of free cash flow that this project will generate once in production is very significant. And it doesn't really matter what industry you're in, if it's making tennis rackets or baseballs. The margins that this project will create are very significant, and that's why we're all here, and we joined the company to be part of something as we build this mine moving forward. You can see that on average, over the first 3 years of the mine life at $1,250 an ounce, it'll generate $90 million a year in free cash flow, which is significant to the enterprise value of the company. As that increases to $1,600 an ounce, that free cash flow will be almost $150 million a year. And that does not include the additional ounces that we added to the resource late last year that we're looking to incorporate in an updated mine plan. So I see Darren's back here now, which is good. Can you hear us?
Yeah, thanks, Stephen. Yeah, exactly. So apologies for that, everyone. But just to give you a bit of background, I'm actually in Montreal today, and this week working with the engineering group that as we're moving through this engineering design phase. So it looks like perhaps maybe they're uploading some important engineering files at the moment, and they stole some of my bandwidth. So apologies for that, but thanks for cutting in there, Stephen.
No, good to have you back. And I think we could probably just move right into sort of the exploration potential and some of the drilling that we're undertaking right now on the project would be a good place to pick up.
Very good. Thanks, Stephen. Yeah, no, as I mentioned earlier, these sorts of systems tend to go on for many years. This is a low sulfidation epithermal system. You can see on this slide here, really the objective over the last 18 months has been to continue to try and migrate some of that inferred resource into measured and indicated. We've been successful in doing that. I mentioned around the fact that late last year, we were able to, in fact, add another 200,000 ounces to measure and indicated. And in fact, the drill program where we've got going now, there's 5 drills going, and we'd expect to update a resource probably in the early part of next year with that same objective. I've previously been involved in a similar type project in the North Island in New Zealand. Originally, it was developed in 1988 with an 8-year mine life. The geology is very, very similar. In fact, in our technical report, we refer to it. And this year marks year 32 of operations, and they've got at least another 10 years ahead of them. So this has got a lot of potential to keep growing. Part and parcel, I think you can see here, even as as we're doing some of the drilling, we're continuing to find more ounces that are step outs. The cross section on the left-hand side was from some drilling that we disclosed here about 10 weeks ago. Very typical in the system where you have 2, 3, 4, 5 veins all running parallel, and you can see the drill hole is targeting. And then on the right-hand side, the long section, you can see that the color blocks are not even there. So the updated resource obviously measured and indicated out, and this is a 25-meter step out. So this is good stuff. I think that ultimately, what we'd be expecting to see when we turn the mills on here in about 2 years, that we're going to have a 10-year mine life and be able to continue to add to that. As we move a little bit further outside the current footprint, our focus really over the last 30 months has been in that red sort of check-marked area. You can see the underground development sitting there as well, and so that's a kind of a 400 by 800 meter area, and that's where the 1.5 million ounces, and that's where the mine's really being developed on right now. But if we look back at some of the work that Goldcorp had done, and much of this is kind of 2008 to 2012, 2013, you can see a number of drill holes to the east and to the north that obviously have intersected quartz veins with good grades. And so I think the geology team, as we look to bring this mine on, we'll look for some budget as we start to push out to the east and the north, take that local model that we've really got such a good handle on now within the deposit, and start to utilize that as we move further afield and find the next 2 million ounces as we move forward. So the current status really, we've been engaged, as I said, I'm in Montreal this week with G Mining Services. They were engaged earlier this year to really kick off an optimization and the basic engineering and design work for the project. They previously were at Fruta del Norte, which is Lundin Gold's flagship project in Ecuador, and did the execution on that. Jack Lundin, our CEO, spent 3.5 years on that project, most of it in Ecuador, and so it's a great opportunity for us as well to steal a few pages out of the book, take those learnings on, and that's ultimately what we've been discussing this week and how we've been advancing through over the last number of months. Trade-off studies on a number of different aspects of the project have really, for the most part, been completed. Definitely well advanced. The flow sheet is frozen now, and so we've been able to go out now for mechanical and engineering packages to vendors, and we're starting to get back details around that. The basic engineering is advancing well. There's in some areas we've got more detailed engineering that's underway. And we'd expect that, as we head towards Christmas, we'll be in a position to be able to start placing some long lead time orders to get those into the fabrication pipeline and into the fabrication shops as we head into 2021. The underground mine development contract, so right now we're engaged with a number of groups running a process for an underground mining contractor for the initial 2 years of development work. That too is well advanced, and we'd be expecting to look to finalize that again as we head towards Christmas here at the end of this year. Looking ahead over the next 12 months, we're building a mine right now, and the work that we're doing now is really getting us prepared for that, all the planning and the engineering. We would expect that drilling will continue, and we'll be able to continue to demonstrate, I think, what is arguably some of the most consistent drill results that a company's been able to put out over the last 2 years that are high grade. As I said, this will probably result in an updated resource, the early part of next year, probably the first half. The project financing package, absolutely key. We really last year kicked that off, expected it would be a 12+ month sort of exercise, and it has been. But I think the important thing there is we put a lot of effort up front last year, with site visits, getting involved with independent engineers, independent environmental and social experts on behalf of the commercial banks. We've been able to put together a syndicate of international commercial banks and export credit agencies, and our expectation is here over the next couple of months that they'll be taking that really to their credit committees for approval, and that's a key catalyst for us, and I'll talk a little bit about that on the next slide. But we're pushing towards $150 million project debt facility, and I think that given the efforts we've put in, the quality of the project, etc., this is going to be at a very reasonable cost of capital and much lower than many of the peer groups that have gone the other direction, which is, I guess, more of the private equity route. Long lead time orders, I mentioned, we'd expect to start placing those before Christmas, and then getting into early works, getting to site, starting to prepare the site for the construction period. We would be expecting to kick some of that off here again before Christmas and get the site set up for construction activities next year. This slide looks at some of the peers, and there's only really a handful of peers in the gold space that are moving through that sort of from explorer into the developer and then ultimately into the operations phase. What you see here are 5 companies, single asset gold companies. K92 is already in production. You look at a company like Pure Gold, they're probably about a year ahead of us. They're in construction. Key takeaways here, you look at the life of mine, all in sort of production, it's kind of around that 180 to 120 you see on the screen. Bluestone screens quite well at an average of 117,000 ounces per year. But I think a key thing to focus regardless on the business is the cash flow and the free cash flow. And because of the grade that we have here and the low operating costs, there's a lot of very good free cash flow that's going to come out of the Bluestone Cerro Blanco asset. And ultimately that's what generates the ability to pay back the investment quite quickly. But in our case, I think we've got quite a bit of room to grow from a market capitalization perspective. Orla is a good example. They're pretty well neck and neck with us. Working through their engineering now will produce a little bit less gold and a little bit less free cash flow, but you can see since they've been able to demonstrate putting the project finance package in place here over the last 3 months, their market cap's moved up materially. And so they're 3 to 4 times our market cap. And so as we put the project finance in place and start activities at site, there's a very real opportunity here, I think, for Bluestone investors to see some of that catch up. And that's why we're 130% focused on this project. This slide here looks at, kind of that evolution of that going through the construction phase and into startup. It picks out, 6, say, companies over the last 4 to 5 years that have moved through that on average, 100% increase in value. Again, because you're going from a cash consumer to a cash producer. 2 of these companies, Atlantic and Continental, were actually taken over by larger entities at a significant takeout premium. And at the end of the day, in our business, Mother Nature's not making any more deposits. And so for companies that have been able to demonstrate that they can transition through, get permitting, get financing, and move these assets into a cash flowing sort of vehicle, ultimately in phase, they can also be attractive for other companies that are, at the end of the day, often struggling to replace reserves. So it's a great opportunity for us, and ultimately is, as I mentioned earlier, we've got a 12 or 14-year head start on ultimately what is today a 15 to 20-year usually journey from discovery through to operations. And as we close things out, I talked before around the support from the Lundin family. The Lundin Group it's a diversified group with operations around the world and a track record that I think is matched by not many over the last 20 years in terms of performance and annual growth rate since 2002, both in the oil and gas space and the mining space. You can see there from Baja Alumbrera, a very large copper gold project in Argentina, through to acquisitions Lundin Mining has made in the oil and gas space. Lundin Petroleum has made one of the, I think, the most significant oil discovery in Norway here a few years ago in the last 30 years and has brought that on. And so, for us to have that sort of partnership really gives us the ability to leverage those learnings, that experience within the group from a technical perspective, from an environmental and social perspective, from a finance perspective. And so we're very fortunate to be part of that group. We're leveraging that now. And I think, as we move forward, the Cerro Blanco project is a great platform for us to build from and ultimately, build a successful, multi-asset operating gold company as we move forward over the next decade. So maybe I'll stop there and look to take questions along with Stephen.
Yeah, no, that's great, Darren. So we do have a number of questions that have come in, and I'll remind everybody to type in your questions on the right-hand side in the chat panel there. So the first one from Jesper is, will we be looking to do a list in Sweden like some of the other Lundin companies?
Yeah, thanks, Jesper, for that question. And that's correct, actually. And Lundin Gold and a number of the other ones are dual listed in Sweden. It is something that has come up as far as discussion points. We haven't made a decision one way or the other on that. Ultimately, we know we have a number of Swedish shareholders, and they're very important for us. We want to continue to grow that. But at this point, we haven't finalized a decision as to the direction on that. Maybe something to stay tuned over the next year, 18 months as we move through the construction phase.
Great. And then another one from Jesper is, Darren, what's your view on hedging and the gold price here?
Yeah, well, it's an interesting one because the gold price has moved up pretty quickly, and I think even to our surprise, when we did the feasibility study last year, we thought $1,250 was a great gold price, and ultimately, of course, it's moved up materially since then. So often I think hedging can become a very important tool to lock in margins where you've got assets or perhaps years of production that are skinny, that you need to kind of lock in that margin in order to kind of maintain a cash flow kind of return that ensures that the asset continues to be cash flow positive. Or in some cases, lenders will require it as well to de-risk those cash flows. In our case, to be honest, we don't lose a lot of sleep at night around what the gold price is because there is such a good margin there already. It's something that we can do in the future. Based on the discussions we've had with lenders so far, they're not too concerned about it. I think it's potentially something that could fall into an overall financial strategy, maybe on a short-term basis, to manage cash flows and manage your budgeting process. But at this juncture, it's not something that's at the top of our priority list, and ultimately, if the gold price is at 1,900 or 2,000 or 1,600, there's a great margin here. It's going to pay back its investment very quickly. Great.
On to some tougher ones now, Darren. So Guatemala is not a well-known mining jurisdiction, and there is some headline noise out of there. Can you elaborate a little bit more on the jurisdiction and are you subject to any local resistance, and maybe elaborate a bit more on the relationship with the local communities?
Sure. Yeah, no, it's a good question. Absolutely. I mean, in today's world and in our business, job one is community acceptance, social license. And we often say as a team here, and I'm surrounded by engineers in this office, that we can engineer most things today where you come up against problems. You can't engineer social license, social acceptance, and really that really falls into how important our relationship with local stakeholders, local government partners is. It's a key pillar of this business, much like the values that we established as an organization with our local team in Guatemala 3 years ago, and it will continue to be as we continue to grow the business. Guatemala, has had more of a high-profile, case in the case of Tahoe and the Escobal project about 3 years ago, where they ran into some trouble with local community relations, in fact, and that social license, and that resulted in that asset being put into a suspension mode. And ultimately, what's happened is a year and a half ago, Pan American Silver, one of the largest silver mining companies in the world, very good track record of operations throughout Latin America, Bolivia, Peru, Mexico, also now in Canada with the acquisition of Tahoe's assets there, acquired the Escobal project and the entire company, in fact, and is working really with local communities to build back that social license. And the government of Guatemala as well is looking to lead a consultation process with local indigenous groups. The outcome of the court ruling in Guatemala was very clear. It said, look, there needs to be additional consultation with local indigenous groups, and once that consultation is completed, the mine will restart full stop. Not a veto power. That doesn't change the permitting at all. Just the fact that there needs to be better engagement and more engagement. And so Pan American's been very careful, I think, to manage expectations on timelines. They're doing all the right things for a sustainable future there. I think, all parties that are close to it realize that, that project will get back up and get started, but they're going to do it the right way, focusing on social license. And so from our perspective, where we are at in the 3 years that we've been there, we've had very little opposition or concern at all. We are down in a different part of the country as well. We're down in the southeastern part of the country, largely an agricultural type area. Our neighbors are local farmers that are raising cattle, dairy, melon farms, for example. And I think an important part as well is that, going back to my earlier comment, this is a project that has been socialized and in the community for 12, 14 years. In fact, the original discovery was done in the late 90s. Glamis acquired it, and then Goldcorp, and there's been a continued sort of presence and advancement of this asset. And in fact, today, there at site, we have about 90 employees. The large majority are from local communities. And so this has been socialized. There's never been a history of conflict. When we're down there, we stay in the local town, we eat in the local restaurants, and, people come up to you and say, hey, you're with the mine, welcome. So I think that it's never something you can take for granted. Absolutely. I spent a lot of my career actually in developing countries, and in much more remote places than Cerro Blanco. And as I said, you can engineer those solutions. It's every day. It's the foundation of the company, and it will continue to be for us. But we're really excited about it, and very confident in terms as we move now forward into the construction and ultimately operations.
Good. So switching gears now a little bit back to exploration, and maybe elaborating on what we think the broader exploration potential is. One of the specific comments here was that Pure Gold thinks that they can find 5 million ounces. What do you think our potential is, or our mine life extension is relative to Cerro Blanco?
Sure. Well, I gave that example earlier around the Waihi project in the North Island, New Zealand, where the geology is very similar. Gold and quartz veins, and my time at Oceana Gold, Stephen mentioned that. I mean, it was fairly regular occurrence on your weekly meetings to hear from the exploration team that, yeah, a new vein was discovered, didn't know about that one in the mine. We've got to, survey it and follow it up. This is very similar from that perspective. We've got a huge advantage that, Goldcorp had put, 3.5 kilometers of underground development in place. We're actually able to go down and see the ore body, touch the ore body, see the veins, and really get a good feel for the orientations. And in fact, north of 40% of the gold is actually above your head when you get down into the underground development already. So it's really given us an advantage from that perspective. From a prospectivity perspective, one of the slides that we showed, really demonstrated that we're just working in a very small area, in an area that obviously has got demonstrated gold intervals to the north and to the south. So yeah, from a potential perspective, is 3 or 4 million ounces out of this belt a possibility? Absolutely. Are we going to put our foot on it, by the end of the year? No. It's going to take some time, and I think this is a perfect scenario for us to be investing in exploration as we're continuing to operate and bring this mine on. This mine's going to pay itself back quite quickly, so there will be cash flow, obviously, that we can allocate to that sort of growth. And I know the geology team is pretty keen to do that. So watch the space, but I'm quite certain that 15 years from now, if we're still talking and I'm still here, this mine's still operating.
Great, thanks, Darren. So now we've got a number of questions on the geothermal project. So I think it would be worthwhile elaborating our thoughts on what you want to do with the geothermal project, and then also the impact that it would potentially have on the mine.
Mm-hmm. It's a unique opportunity, and I think for many of us that have been in the mining space for a number of years, it's not very often that you walk up to a project that also has the potential to generate electricity for the mine, not too far down the road. And so really the background on this is the geothermal project, the Mita Geothermal project, is to the east of the mine site. Goldcorp historically had invested about $60 million in this, and the real background around that is at the time when they looked to do that, in the 2008, 2009, 2010, 2011 sort of time frame, you'd recall that oil prices were higher, coal prices were higher. There was still a fairly significant amount of power generation in the country that actually came from carbon. And also the commercial grid was about 35 kilometers away. And so those two combination of factors led them to look and to put some investment in renewable energy source and geothermal. And we did some follow-up work when we acquired the asset in 2017. We brought some experts in out of California. And really what was identified was that already, based on the drilling and technical work that's been done, there's somewhere between 5 and 10 megawatts of power potential already identified. This is in a more intermediate type horizon. But we strategically made a decision to keep it sort of at arm's length from the mine. What's happened now is that the grids come in, so we're really only 8 kilometers from an upgraded substation that we will tie into, and so that's made it more simple. Also, the power prices have gone down. While there still is some power that's generated from coal, there's been new hydro that's come on over the last decade, and that's actually drove the power price down significantly in Guatemala, to the point where actually Guatemala is an exporter of power, both to El Salvador and also north to Mexico. And so to simplify the overall sort of gold project, we're assuming we'll pull power off the grid, but the opportunity does exist at some point in the future to potentially complement that with power from the geothermal project. It would require capital to build the plant. We have had a number of inbound queries from potential partners. We've had good discussions with the government. The government has got this as part of their 15-year energy plan to try and drive more towards renewable energy. And so we have had some good discussions with the government around this. We believe this will be the most advanced geothermal project. And I guess the best thing to say is watch this space. I think there's a possibility definitely over the next few years where perhaps there's an initial sort of plant that's brought on. But right now, not a focus for us. We're not budgeting any capital for it. We've got some discussions going on potential partnerships.
Great. So specific question here, are there any environmental or operational permits that are required to initiate production or construction? What's the status of these? And then along the same lines of that, what is the timeline for production and the further financing package?
Right. Yeah. So from an approvals perspective, that was one of the things that's quite attractive about this project. Again, I mentioned earlier, it is a small footprint sort of project. I think arguably one of the smaller footprint projects you'd find out there, definitely the smallest one I've ever been involved with. And so from an environmental approvals perspective, et cetera, we could actually get going with the approvals we've got this morning, quite frankly. We do need to get some smaller licenses and permits, construction licenses, that sort of thing. But these are relatively straightforward, and they'll come in due course as we look to kick off construction later, well, actually early part of next year. So yeah, as far as the approvals go, I mean, we're ready to go. And then from a financing perspective and timeline, correct. We were able to do a successful equity offering earlier this year to really put the bulk, if not all, of the equity in place for the development. We, of course, now are turning our attention to advancing the project finance facility, which I talked about earlier. We'd expect to go to credit approval here over the next couple of months on that. And then as we get that sort of in place, we'll have a sense in terms of the quantum of that project debt plus the equity that we have now, and we're investing obviously in the engineering phase. And then also as we start to move forward over the next few months and start to place long lead time items, we're able to start locking capital costs down. The finance in the bank right now takes us well into 2021. We do want to get the project finance bedded down. And then ultimately, getting up in early works and starting construction. But we're in a good shape, and we'll be clearly moving into that next phase next year. Great.
We do have a couple more questions specifically on sustainability in the communities around the mine. I think maybe, Darren, it would be worth elaborating on our work with AMAR, our focus on the environment, specifically. Our water treatment and our impact or what we do there to minimize any impact to the environment. and talk a little bit about that, and then also our work with the Lundin Foundation so that we can build capacity at site and build out our supply chain in country.
Sure, no, absolutely. So part of the infrastructure that's already in place there is a water treatment plant, and it's one of the more sophisticated water treatment plants in that entire region of Central America. Water, of course, is always an important aspect. It's important to me and my family. I'm an avid fisherman. I spend a lot of time on the water, and as I said, I mean, from a corporate social responsibility perspective, water has to be very closely monitored and taken care of. The good thing straight out of the box on this project is it's a very small footprint project. So the amount of water that's required and the amount of water that's produced and discharged is very relatively quite small. On top of that, I talked a little bit about the process that we've gone through with regards to our project finance. These are international commercial banks, export credit agencies that are representing countries around the world. We have had a significant team of not only technical, but probably just as importantly, environmental and social experts from across Canada, the United States, Latin America, come through and do reviews on all aspects of this project using the IFC performance standards as a base. These are Equator Principles banks, and water, of course, is a key aspect of that to go through and review, not only in terms of what we're currently doing, but also how, as the project moves through that construction and into operations, this will be managed. One of the things that was already in place when we arrived 3 years ago was a participatory water monitoring group that is made up of community members that does independent water monitoring over 26 or 27 different sites that are actually inside, but most of them are outside of the fence of the project, upstream and downstream. And those results are then sent off to an independent lab, and it's the community-based group, AMAR, that Stephen talks to, that manages that. On top of that, and there's been no issues at all, obviously, in terms of what's leaving the perimeter. On top of that, the environmental ministry in Guatemala, referred to as the MAR, and they too do their spot checks, unannounced, will show up. And in fact, last year when I was at site, the truck arrived and one of the Marne representatives showed up and unannounced was taking water samples to check on the water samples that also we take as part of our ongoing monitoring. So there's an immense amount of monitoring and focus on that aspect. And it's not just water, right? It's dust, it's flora and fauna. And again, when you look at the impact, this is such a small footprint project. It's, in some cases, it's less than 1% of the size of many mines out there today that are operating. So it's a continued focus for us. It will always be. The metallurgy in this project as well is relatively benign. It's low sulfidation epithermal system. So that's another thing that we have going for us as well. And ultimately, it'll continue to be a key focus for us as we move forward. But good questions, and we really appreciate that.
Yeah, they are. Yeah, this is very engaging. So it's good to see the interest in the project and the company. We're getting down to the final couple questions here, Darren. Quickly, are we looking, or are you looking at further acquisitions of assets in the country? And are you just in generally considering other projects at this time?
Yeah, so I think it's fair to say that we've got about 130% of our time is focused right now on Cerro Blanco for many of the reasons we talked about earlier. The fact that it's got a 12 to 14 year head start. We're on the verge of really kicking off and moving into this next phase of development. The robustness of the project, the support that we have from local communities, but also the Guatemalan government. And so, at this stage, I think that it's fair to say that no, I mean, we think there's a lot of value to be unlocked here now for local communities, obviously through the training, the jobs, the creation of job opportunities, and just underpinning industry in that area. And of course, for us to be able to build a mine and pay it back and make returns for shareholders. Having said that, one of the reasons that I joined 3 years ago was that for me, looking at this project and this opportunity, it's very rare that you get to step into a scenario where there's been $200 million invested. You have the permits you needed to kick things off, and it's a high grade project of this nature. And so it really appealed to me, and I think also the Lundin family is a great platform to build from. At the end of the day, it's about cash flow, and this business will generate good cash flows, and so that will provide opportunities, I think, to build off of as we go forward.
Great. So final question from Jeff, and we'll end on an easy one, Darren, for you. Just what do you anticipate the mix of debt to equity for the overall project financing package to be?
Yeah, so that's obviously something that's in discussions right now with the banks. We've got an advantage, the fact that there is quite a bit of sunk capital there already, and that's money good. That's ultimately already started the project in many regards. But that 60-40 sort of split, 60% debt, 40% equity is usually sort of the ballpark.
But to finish off his thought, we're targeting that sort of 60 to 70% debt to equity loading in the overall project financing package, and we'll be looking to put that together and announce something in the next couple of months, as Darren mentioned during the presentation.
I think I'm back.
Yep, I think you're back now, and
it's another one of those engineering files.
Yeah, I finished your thoughts for you. Yeah, so I think this is a good point to end, Darren. Just looking at the questions now, and I think we kind of got through them. And I apologize if we didn't quite touch on anybody's exact question. We had a lot, and I tried to group them together and answer them the best we could. Really appreciate everybody's interest and feedback. It's great to see that out there. With that, any closing remarks, Darren?
Well, thanks to everyone for attending. I think for many of you, this might have been the introduction to Bluestone. But please continue to watch the story. As I said, I mean, we're right in the middle of it. We've got a great project here. We've got a great support from local communities. And over the next 4 to 6 months, we're really going to be transitioning into that development sort of construction phase. There's a lot of opportunities, I think, for investors here, and also for our many local stakeholders in Guatemala. So we look forward to keeping you updated over the next few months, and welcome any further questions that come in through info@bluestoneresources.com. Stephen and I are very happy to come back and engage on that as well.
Great. Yeah, thank you very much, everybody.